Welcome back to The Income Generation, the show where we provide information for that critical period in life when you're either in or approaching retirement. I'm David Scranton, your host. I look forward to this opportunity each Sunday to share insights and expertise that I use in my own investment management practice. Insights that you can either use as food for thought or decide to act upon while building or managing your finances, especially including the money you need for retirement. In our nation, we've been blessed to have some really great past leaders. Many were true leaders, men and women not afraid to break from the crowd and to blaze new trails. And many of us still draw inspiration and guidance from these leaders who have long passed. Personally, I'm still driven by things said many, many years ago. I've recently recalled and sharpened my own bearings with something very powerful from Ronald Reagan. And I continue to be influenced by my mom every day, even though we lost her more than 2 years ago. On today's show, you're going to learn one of 7 core values that I believe are very important for anyone who wants to maximize his or her success as an investor. That core value, as you might have guessed, is leadership. You're going to learn how to determine the answers to 2 very important questions. Number 1, do you yourself have enough innate leadership qualities to manage your own money? And number 2, does your financial advisor possess those qualities? But first, what does leadership have to do with financial planning in the first place? Well, a true leader not only knows when the time is right to break from the crowd and take the road less traveled, but has the courage to act upon it. And that is essential and crucial in financial planning. Part of investing results from knowledge and expertise, yes, but a lot of it also comes from your internal makeup, your mental and emotional wiring. And based on my experience, I've found that the vast majority of people simply aren't emotionally wired to be good investors. In other words, someone who's usually swayed by the actions of others is not a good leader. I was having this conversation recently with the publisher of my upcoming book, Return on Principle. The good news is she was completely inspired by the section on leadership. We've come to know each other well over the last few months working closely together, and she's realized that if there's a choice between my taking path A or path B, it doesn't matter to me what everyone else is doing. My publisher has come to know me well enough to know that I'm probably going to analyze the facts, trust my gut instincts, and not be afraid to deviate from the crowd when necessary. It's important in self-evaluation to be brutally honest with yourself. Do you have the right leadership qualities to manage your own money? Can you instinctively go with what's in your gut, even if the herd mentality has others taking a different path? Or do you yourself tend to follow conventional wisdom, even when it feels irrational? How about those with whom you consult? Do they look at every situation as being separate and distinct, shielded from the views of others? Or will they just follow the crowd? You know, crowd following does give them the ability to blame external circumstances if something goes wrong, even if they've actually increased the odds of something going wrong with the direction they've chosen to take. Think back to the financial crisis in 2008 when the stock market was plunging. Perhaps you heard financial advisors say things like this: well, if it makes you feel any better, we're all in this together. And if you did hear that, did it really make you feel any better? Probably not. If you do an honest gut check with yourself and discover that you're most comfortable going with the crowd, that may just be a good indicator saying that you should leave financial planning in someone else's hands. Someone knowledgeable who can make decisions based upon circumstances instead of the popularity of an idea. On the other hand, don't automatically assume that any advisor naturally possesses these qualities either. Remember, advisors are human beings also. And if the majority of the general population isn't wired with the right kind of leadership qualities for financial planning, then chances are the majority of advisors aren't either. If you do have an advisor who's completely comfortable deviating from the pack and following his or her own expertise, then you may have found someone worth following. So how can you tell? Later in the show, we're going to talk about hired experts with an emphasis on determining whether or not someone's suitable for you. You should know whether he or she has the internal confidence to make independent decisions or whether you should still be seeking the right person. A person who isn't a follower, but instead a person who's comfortable taking the road less traveled when he or she believes it's in your best interest. What I found over the years is that people can have all the knowledge and credentials to manage their own money, but if their internal makeup causes them to follow rather than lead, then their decision-making process is often skewed. This is when people will move in the direction of the herd. And this is very, very common, but unfortunately is not in the best interest of your retirement needs. In fact, some of the smartest people in the world don't have the internal fortitude to break from the crowd. I think about this sometimes. I personally am the founder of 3 significant businesses. To me, going my own way and trusting my judgment feels normal. But others, including some investment professionals who get paid to advise, often don't trust their own judgment. This is going to be a fun show today because we're all going to learn a lot about ourselves. We'll also talk about some specific examples where a lack of financial leadership may have been costly for you in the past and how to potentially avoid that in the future. In a few minutes, I'll be bringing out a special guest, John Addison. John is author and speaker and also the former co-CEO of Primerica. He has a new book entitled Real Leadership, 9 Simple Practices for Leading and Living. It's a great guide to help you recognize leadership either in yourself or in others. But first, we'll take a break and we'll be back with the market breakdown.
Read David J. Scranton's groundbreaking new book, Return on Principle, 7 Core Values to Help Protect Your Money in Good Times and Bad. Discover practical solutions to the financial challenges facing today's generation of retirees and near retirees. Learn the truth about Wall Street, the financial media, and the secrets they try to hide from everyday investors. This isn't just another book about investing. Working Americans who have lived through 2 major stock market crashes and the worst financial crisis since the Great Depression in the past 16 years don't need another book about investing. David Scranton's approach to financial planning is a holistic system designed for maximum protection, strategic growth, and reliable income regardless of market conditions. Stop planning for retirement with your fingers crossed. Read Return on Principle, 7 Core Values to Help Protect Your Money in Good Times and Bad. Available now.
One company I founded called Advisors Academy helps financial advisors through coaching and mentoring. It also helps them with marketing and even provides leadership on what may best suit clients in various situations. From advisors looking for my help, I hear a great many horror stories. The worst come from good people who work for some of the larger, well-known, well-advertised firms. These firms' business models are often cookie cutter and so formulaic that a true leader easily becomes frustrated. They've told me stories where advisors in 2000 and 2007 were looking to help protect their clients' money by pulling them from the stock market and from mutual funds. Some actually wound up losing their jobs because they were leading rather than marching to the beat of the corporate drum. They lost their jobs even when they were ultimately proven right. That's why eventually most true leaders in the financial advisory world become independent advisors. But again, don't assume that all independent advisors are true leaders either. Some are, some aren't. So what do these formulaic cookie-cutter business models used by the big firms look like? Well, they're usually based on a lot of supposed truisms about the stock market that are repeated so often that they're taken as gospel. For instance, the market cheerleaders are always saying, hang in there, the market always comes back. This one is a favorite of the media and financial advisors whose clients just lost money. What they don't really talk about is how long it can take for the markets to come back. Another Wall Street cheer is, over the long run, the stock market always does better than everything else. Now, that sounds like something you want to get behind, right? But from 2000 to 2013, the market, as measured by the S&P 500, had 0 growth for 13 years, despite Wall Street's cheer. So it's important to consider the question, just how long is the long run? Here's another. It's not about timing the market, it's about time in the market. This would seem to make more sense for those selling investments than for you, and it does make more sense for them. After all, they make money through fees and commissions as long as you're buying their stock market-based products. Let's talk a bit more about that. Clearly, the fiduciary responsibility of any head of a publicly traded financial institution is to maximize shareholder value. So how does one maximize shareholder value? By managing toward increasing corporate earnings or profits. One necessary component of increased earnings or profits for shareholders is to keep people invested in their products, which again are often stock market based, which is one reason you hear those supposed truisms repeated so often by these big firms. I know I've talked a lot about this before on the income generation, but I cannot overemphasize the impact of sponsors and advertisers on the news that we get. The fact is, the financial media, like the print and broadcast media in general, makes most of its money not through subscriptions, but through advertisers. To keep these advertisers happy, the message from the financial media is typically one that sheds a very positive light on the products that these firms sell. And again, those are typically stock market-based products. But it gets even worse than that. These same financial institutions that influence the media can also influence individual advisors in a more fundamental way. Most advisors gain their credentials through training, but very often that training is received either directly through one of the big investment firms or through a school that's either founded by or currently supported by one of these firms. Many advisors were taught with a significant bias that may not be in their client's best interest. This is what I call Wall Street's cancer because it infects and spreads through the financial institutions, through the media, and even into the schools that teach financial advisors. Remember, your number one priority should be protecting your assets. So let's get into some specific examples of when a lack of leadership might have left you unprotected and cost you significant dollars in the recent past. One example is if you lacked that kind of leadership, these qualities I've been discussing, back in 1999. You might have ended up losing 49% of your money when the stock market plunged, then took 7 years just to recover to its previous peak. That's 7 years of zero growth in the stock market overall. You might have been a do-it-yourselfer back then, or you might have had a financial advisor who wasn't wired to take the road less traveled, who lacked the leadership qualities you needed at that time. Either way, you incurred a 49% loss. On the other hand, if your advisor was a true leader and got you out of the market in time or even on a slight decline, you may have saved yourself a lot of money, a lot of heartache, and a lot of stress. Think about it. Did you or your advisor at that time have the internal confidence to take the road less traveled when almost everyone else was following the herd and ignoring all the warning signs? For instance, when you heard people all around saying that price-to-earnings ratios of 100 could be the new norm, it's the new math of investing, we heard, and that deep down you knew that didn't pass the sniff test, what did you do back then? Now, looking forward to 2003, when everyone was afraid to get back into the market because it had gone down by 49%. Did you have the confidence in your own judgment to get back in, to buy stocks when they were on sale? If you were fortunate enough to get out before the market dropped the full 49%, did you then have the leadership qualities to buy back in, again, half-priced when stocks were on sale? Or if your advisor had gotten you out in time, did he then have the leadership qualities to get you back in at the right time? Now fast forward to 2007. The public knew about the subprime mortgage crisis as early as March of that year, but the market kept climbing into November, giving us plenty of time to adjust our portfolios. Were you part of the herd that kept pushing it upward? If so, did you stay in only to end up riding it all the way back down again, this time to a 57% drop? Or even worse, if you're with a financial advisor at that time, did he allow you to incur this painful slide? Or did he have the foresight to see what was coming and help you take the road less traveled? Because the truth is, even if you took action to reduce your stock market exposure after the slide began, and it ended up costing you only 20%, 15, 20, 25%, that's still leadership. If you didn't see the peak coming and got out with just a little bit of a loss, there's nothing wrong with that because at least you did take some evasive action. You didn't just cling on to those supposed truisms and follow the herd all the way down to the bottom. Now, let's fast forward again to 2009. Again, we were at the bottom after more than a 50% loss. Were you part of the herd listening to the world is falling apart fearmongers? Or were you the one who put something back into the market? A market that was much cheaper than a couple years earlier when everyone loved it. Let's say you did pull out of the market at some point during the drop between 2007 and 2009, but you still took a hit and were reluctant to get back in even after the market had bottomed out. Well, at that point, seeking more conservative alternatives, you may remember hearing concerns that interest rates have come down so far, they'd gotten so low that they now had nowhere to go but up. You might have thought, that limits my non-stock market options because if interest rates go up, I know bonds, for example, will decrease in value. Do those words sound familiar to you at all? So instead, did you or your advisor decide it was better to keep your money in cash, earning nothing? Because if you or your advisor did have the right leadership qualities back then, you might have looked at all the factors and realized that interest rates didn't necessarily have to go up anytime soon. In fact, looking back now, they really haven't. Your advisor might have pointed out that near zero interest rates could be here to stay, much like Japan, which had been in a low interest rate market, in a low interest rate environment for over 2 decades. He might have recognized fixed income as a good option for earning reliable interest and dividends rather than earning nothing sitting on the sidelines. So where are we today in 2016? Well, our regular viewers know that I've recently spoken about a potential perfect storm right now for the stock market. Sebastian Junger's book describes a perfect storm as being 3 converging fronts that in of themselves are nondescript, but when combined form a particularly violent uprising. I believe that a perfect storm may be brewing right now and could lead to another major drop in the stock market. So it's time to ask yourself these questions. Do you or does your advisor have the right leadership qualities to weather the storm? Are you going to follow the truisms and the herd? Things like buy and hold is the only way to go and you can't time the market. And if the storm starts to wreak havoc on your portfolio, will you stay the course and believe there's nothing you could do? Keep in mind, too, that interest rates are still at historic lows. In fact, it reminds me of 2008 when people were saying interest rates have to rise soon. But do they really? Again, financial leadership is about recognizing the best road to take for your specific situation, even when it's the one that's less traveled, and having the courage to take it. Now, after the break, I'm going to bring out an expert on leadership, John Addison, to talk about leadership qualities you may not have even thought of. We'll be right back. If you're near or in retirement, head over to theincomegeneration.com and download your special report written specifically for the needs of the income generation, again, those born before 1966. I'm David Scranton, and you've been watching The Income Generation. John, welcome to the show.
It's great to be here with you today. I've been looking forward to it.
Well, it's great to have you. And on today's show, we're talking about leadership, but we're talking more about internal leadership. Of course, your book is talking about external leadership, how to lead others. And first of all, I want to tell you that I loved your book. To me, the stories of your growth from the ground level up through Primerica and all the challenges that you had throughout that period really drove home each of your leadership points in a way that made the book, in my opinion, very hard to put down. I could see where real leadership can be used by organizations that give copies to their staff in order to help build a culture that breeds influencers and leaders. But tell me, at the beginning of the financial crisis in 2008, financial giants like Bear Stearns, Lehman Brothers were falling. Primerica seemed sheltered by its parent, Citigroup. Of course, Citigroup was having their own problems. And that's right, exactly. And they eventually kind of threw it to the wolves and spun off Primerica in an IPO. And from that IPO, it's also my understanding that Primerica received no operating capital. So as the head of Primerica, you were suddenly left on your own in the middle of a financial storm, expected to compete with the likes of MetLife, Pru, and others. My question is about focus. How does somebody in that position meet the challenge of staying focused when you're being bombarded with nothing but negative news?
You know, it's actually a very interesting process, and just a slight adjustment to that. Our business had been a part of City for 20 years. And we were very successful. Our business was very profitable and, in fact, had significant excess capital on our books. We were $4 billion of excess capital on our books. So as we were trying to separate, and in truth, it was Rick, my business partner, Rick Williams, and I were co-CEOs. We were the ones that drove wanting to separate from City, because City being under TARP, all of the issues, it had become a very toxic environment for our business. And so our biggest challenge was to make sure that City, which was capital depleted, we were capital rich, that we could make the transaction work in a way where it worked for City. So I'm not going to get into all the details, but we did a very kind of complex reinsurance transaction that Rick was really the genius of, that left City with the book of life insurance business that we had a service contract for. We left as a smaller business, but with a great growth trajectory. Mm-hmm. So it was really a transaction that actually worked for both sides. But to your question, in the height of the collapse, most of the people in our home office, in our sales force, their entire net worth had been Citigroup stock. And if you remember, it went from $50 a share down to below $1.
I remember all too well, yes.
And I've got the scars and the lost carry forwards to prove it. And it was incredibly turbulent. And as we were dealing with that, I remember having many arguments with Citi where I said, look, I'm trying to get my people on an ark and get them to a safe harbor so that they're safe, so that they're at a place that works for them. The focus that kept me going was I knew I was responsible for my people's lives. See, I was with the company 30 years, 33 years in total. We had 300 employees of our 2,000 that had been with the company for over 30 years. And our sales force all over the US and Canada, many of them with the company over 20 years, they weren't my employees, they were my friends. And I knew I was fighting for families' lives. And when you have that focus, when it's bigger than a balance sheet, when it's bigger than a check, when it's an existential fight for people's lives that you love, that keeps you focused. I mean, it really does.
That's a great answer. I know also in your book you talk about lighting the fire within people versus lighting the fire under people. Can you talk to that for just a moment? Because I thought it was great language.
Well, I appreciate that very much because it's something I believe strongly. You know, bosses, which is double SOB spelled backwards, light a fire under people. Fear motivates in the short term. If you're afraid you're going to get fired, guess what? You'll work hard for a few days. But what lasts for the long term is when you light a fire within people, in their soul, in their heart, and you get them to perform being a part of the team. See, I believe great leaders, real leaders, are not people that yell at people, scream at people. Real leaders are a part of the team. They view the team as bigger than them. I talk a lot about servant leadership, where, look, titles are temporary. The cemeteries of the world are full of irreplaceable people.
Sure.
None of us are that big a deal. I don't care what your title is. That what you got to do is you got to realize that your job is to build the organization for the long term and to impact the lives of the people that you touch. And if you take that approach, even when people disagree with you, if they know that you're honest, if they know you can be trusted, if they know you have a good soul, then they're going to go with you. And so I've always learned that the one thing that as a leader, a real leader, you can't violate is the trust of your team. Look, if you make decisions, people are going to be unhappy. A decision means that you did one thing instead of another, and there's going to be some people who wanted you to do the other. But if they know that in your soul, you're not doing it to make yourself look good, you're trying to make a decision that's going to make the team win, people will follow you.
Absolutely. You and I both know people who think, well, gosh, just because I have the title, people should do what I tell them to do. And of course, you and I both know that's not how it works. I always tell people the most important thing is if you want to lead, people need to know that you care about them. We have to take just a quick commercial break right now, but stay with us. When we come back, we're going to talk about more of the leadership practices, the 9 leadership practices in John Addison's new book. We'll be right back. Welcome back. I'm here today with John Addison, author of the book Real Leadership, and we're talking about what he calls the 9 practices of real leaders. John, you talk a lot about the idea that you need to shine the light on others and give them credit, but yet when things go wrong, you need to say mea culpa. You need to put that on your shoulders. Talk to us about that for just a bit.
You know, I think most real leaders are the antithesis of politicians. You know, usually a politician, when something's going great, the number of times they say the word I mean, it's I did this, I did that. When things go bad, it's always they, the they out there that did it. It's opposite with great leaders and real leaders. When things go well, it's we. It's team. It's big team, little me. When things are going good, I worked very hard. If you ever heard me speak in front of a big crowd of people, I don't say the word I say we. I worked hard training myself in my mind to insert we instead of I. It's always we, it's always our, it's always together. When things go bad, even when it's not your fault, sometimes people under you make bad decisions or whatever, you gotta own it. You're the leader. Hey, when the football team loses, the head coach is responsible. When the economy's crappy, the president's in charge. I mean, great leaders, real leaders, own the problem. And, that's the reason sometimes even when it's not their fault, they have to resign or step down. Look, when you step into the world of leadership, that comes with responsibility. So you don't get to just go, hey, things are great, look at me. Oh, things are bad, look at them. It's really the opposite.
There's some people with small businesses that get started that don't understand this. They always think that, well, my employees are there to serve me. And really the reality of it is a leader knows that he or she is the servant to his or her team. Isn't that correct?
That's absolutely correct. I mean, most of the great leadership lessons you can learn in life you could read in the Bible. I mean, in truth, it's about them. It's about the team. It's about your customers. You've got to approach that when you're in a leadership position. You're responsible. And so I think many of the great leaders, we were talking about shining the light on others. One of the great stories that I remember reading, I read a lot of history. I love to read his history. Winston Churchill's one of my, heroes. I'm a member of the Churchill Society. But there's a great story about a lady who was a journalist. And it was when Benjamin Disraeli was running against Gladstone for Prime Minister of England. It was a big election between the parties, and whoever prevailed, either Disraeli or Gladstone, would be the Prime Minister. And she met with Gladstone, and then she met with Disraeli. And she had an interesting comment. She said, I spent an hour with Mr. Gladstone, and at the end of it, I thought he must be the most brilliant man in England. I spent an hour with Mr. Disraeli, and after it, I thought I must be the most brilliant woman in England. See, he made her feel special. It was about her. Great leaders shine their light on other people. It's not all about me and my ego and how I look. It's about how the team looks. If the team looks good enough, guess what? The light's going to shine back on you plenty. So, you're responsible for others. That's the job of a leader. I think too often now, in this kind of narcissistic world we're in now, it's me, I, look at me. The truth is, great leaders are about we, not me.
Agree totally. A lot of our viewers are in positions in corporations where perhaps they don't have direct leadership, or at least they perceive themselves to not having that because they don't have the title per se. And a lot of our viewers are also retired. So can you tell them how they can truly be a leader in their own lives and with the people around them without having a title?
I appreciate that question very much, because I think that's a misnomer to people a lot, is that maybe you don't have the position, maybe you don't have the title. Look, the reality is the greatest leader, the person I learned the most leadership skills from in my life was my mom. She was a school teacher. She didn't have a big job, thousands of people reporting to her, but she was one of the most influential people I've ever known. In our small community in Georgia, she was the center. When somebody was having a marital problem, a family problem, whatever, they always called her Miss Ruth. Everybody would talk to Miss Ruth. I mean, she just made people feel better. She lifted them up. When she passed away suddenly, unfortunately, 10 years ago, she was 80 years old. At her funeral, even though she was 80, the little church was packed. People were outside, people of all ages, kids she taught. She influenced people. And see, leadership is influence. Whether you've got a title or not, you can be a positive force. You can influence people. You can make things better. I became a leader, but way before I had a title. When I was in a meeting, when I was a young man and didn't have the title, I had influence. I could convince other people of what I believed. And so don't wait till you have a title. If you wait till you have a title, it's too late. I mean, you need to build these skills in life before you get there.
Absolutely. So you learned your leadership from the same source, which I did. Yours was Miss Ruth, and mine was my mom, Miss Irene. And I guess that's, for those of us fortunate to have learned it at home, that's awesome. And for those of us who are not fortunate enough to have learned it at home, I really recommend that you pick up John's book. Again, Real Leadership, the 9 practices for leading and living with purpose. So, John, thank you so much for being here today. I really appreciate it, and I really did love your book. I couldn't put it down once I picked it up.
Well, thank you so much. That means the world to me, and I hope people do pick up the book, because I believe leadership is the scarcest resource that we have. And my goal now is to be an evangelist for real leadership, not
That's awesome.
Look at me braggadocious.
Good for you.
And I appreciate your time. Thank you so much. I've enjoyed talking to you.
I appreciate your time also. And stay with us, because when we come back after the break, we're going to talk more about leadership and how you can espouse leadership in your own personal financial life. We'll be right back. This is fun. This is great. 3, 2, 1. I'd like to take a few seconds and tell you why I decided to write the book entitled Return on Principle. Basically, it all boils down to this. Let's face it, you deserve to live a happy retirement. It's as simple as that. But for many, the subject of money, finance, and math is complicated. Here's a fun fact. Many Americans claim that they'd much rather clean a toilet than calculate a tip in a restaurant. Thank you, I guess. But it doesn't have to be that complicated. Using the 7 core values I outline in my book, you too will be able to build a life based upon the right core principles. Cut. Return on Principle isn't just a book about financial investing, it's about investing in your life. I know for a fact that you're going to love it. Okay, now it's just getting a little weird here.
David, this whole show makes me think about the classic comeback that parents always have with their kids when they want to do something crazy.
Are you referring to the one my mom used to use on me all the time and say, you mean if all of your friends are jumping off a bridge, does that mean you're going to jump off a bridge also? Is that the one?
That's the one.
Yeah.
But isn't it human nature to kind of follow the crowd?
You know, unfortunately it is, and I think our society in marketing really helps perpetuate that. You know, think about what you hear. You know, they're selling off the shelves, there's only 2 left, buy now or you're going to miss your opportunity. So it's that kind of thing that actually helps perpetuate the herd mentality.
Hey, nobody wants to feel left out or left behind.
That's right.
But you know, it's also important because, like you've pointed out, the most important thing or the most important path isn't always the best or right one.
That's correct. In fact, it reminds me of a famous Mark Twain quote that I'd like to quote. That basically says, "Whenever you find yourself on the side of the majority, it's time to pause and reflect."
Ah, I like that one. I'll follow it up with my favorite Robert Frost. To paraphrase, it says, "I took the road less traveled by, and that has made all the difference."
Yeah, exactly, same thing. It's the road less traveled. And I'm going to stop there because I'm a numbers guy, so probably Mark Twain was the only piece of literature that I actually read from start to finish and didn't just read the Cliff Notes when I was in school. So.
But something you do know a lot about is investing, so please tell me how these principles apply to investing.
Sure. You know, it makes sense for investors because we can all remember times when we looked at a new company and we thought, wow, this is a great idea. Why didn't I think of it? I should buy some stock. And even though you might have known not to buy a lot of it, you could have bought 100 shares or some amount that if you'd lost it was rather meaningless. But you didn't pull the trigger. For some reason, you didn't feel comfortable following your gut instincts. Or even worse, you know, something had run up a bit and you wanted to sell and you want to take your winnings off the table and you thought maybe it was getting a little high, but all the analysts out there were saying, oh, it's still a buy, it's still a buy, it's going to go up, it's going to double again. So you stayed in there only to watch it go back down again.
Okay.
Happens all the time.
So David, I know in your new book you have coming out, Return on Principle.
What's that book called again? Can you
Return on Principle,
Return on
pun
Principle.
intended.
Okay, all right, perfect. I just want to make sure I heard it correct. You know,
you did. Very
right.
clever
It's
title.
not a shameless pitch for my book, by the way, in case you're wondering.
Hey, nothing wrong with that. But you do have a lot of important advice in there, and some of it is helping people determine whether they themselves or their advisors are leaders or followers.
That's right. And that's why I wrote the book, because I wanted to be able to get people to look introspectively. You know, investing isn't just about the external game. It's not just about the knowledge. It's about the internal game. Do you have the right internal makeup, the right stuff to be a good investor, or does your advisor have the right stuff to be a good advisor?
So it's very important. Shall we go through them one by one and you can expound a little bit on each one?
Absolutely. I'm glad you asked.
Okay. Well, the first question to ask yourself is, are you the kind of person that doesn't zig when others zag? So do you feel comfortable implementing something only after you know others are doing it, or are you kind of a leader?
This is tough because this is where somebody really has to be brutally honest with yourself. You have to look in the mirror and you have to think about times in the past when, you know, maybe you had a gut instinct. Did you follow that gut? Did you have the courage to do it? Or did you not? Did you follow the crowd? And you know, it's funny because nobody wants to really think of themselves as being a follower. Everybody wants to think of themselves as being a leader. And that's why this particular one is something you need to be really brutally honest with yourself on.
Okay, and the next question, and it has 2 parts, is also something you need to ask yourself. The first part is, do you have good instincts for recognizing when something doesn't pass the sniff test? And if so, do you trust your instincts enough to take action?
And you know, it's kind of difficult because our viewers, I know, are probably half male, half female, although I find that in many cases probably more men watch financial shows. But you know, women, gentlemen, women, ladies, our wives and significant others are really much, much better at trusting their gut instincts than we are. And a lot of times guys specifically don't do that. We overanalyze things and we talk them out of things. And the reality of it is, if you think about how we make decisions, you know, all human beings make decisions in just an instant, and then they spend a lot of time trying to justify it analytically, and that's really a left brain function. And like I said, you don't need me to tell you that ladies are much better at following their gut instincts. So I'd like to get our male viewers to be a little more in touch with their feminine side, I might say.
Well, this leads us to our next question because it kind of expounds a bit upon that. The next question to ask yourself is specific to investing, and it's, have you ever had a hunch or a gut feeling, like you were talking about, that some investment was about to go up or down, but you failed to act because it went against popular consensus or recommendation?
Absolutely. And everyone has those stories. So just because you can come up with one story where you thought about buying something or selling something and you didn't do it, that's not a problem, but you have to think about the majority of your decisions. In my opinion, if you say 70 to 80% of your decisions you follow your gut and maybe only 20% you didn't, well, that's still okay. That's a good sign. But if you're the kind of person who perhaps had a majority of those gut feelings that you've stuffed and you've refused to listen to them, that could be a problem.
Okay. Well, we've got to take a break right now, but don't go
anywhere.
anywhere.
We're having so much fun.
I know. Well, we're coming back, so please don't go away. When we come back, we're going to give you questions to ask your advisor to determine if they have leadership qualities.
If you're not using someone who's well trained in fixed income and you're born before 1966, it may just be time for you to break up with that advisor and move on. I would suggest someone who will care for you through these important years of your life. If you need help finding someone, call or write us. I'd also like to remind you of the special report entitled The Income Generation. This is available free to you, our loyal viewers, online. If you haven't downloaded your report, pick it up after the show. If you're near or in retirement, head over to theincomegeneration.com and download your special report written specifically for the needs of the income generation, again, those born before 1966. I'm David Scranton, and you've been watching The Income Generation.
Welcome back to The Income Generation. We're discussing leadership qualities today and how to know whether you or your advisor have them. Okay, these next questions are to help you determine whether your advisor has the kind of leadership qualities we've been talking about. Okay. First, we were talking about ourselves personally. Now we're talking about our advisor. So number one, ask him how much financial research he does personally versus how much research is supplied by his firm. Now, why is that so important?
Well, it's important because most people don't realize this, but if an advisor works for a big firm, most of the time they're getting just a fraction of the commissions or fees. Okay. Sometimes less than 50%. So you have to ask yourself, why would a successful financial advisor with all kinds of years of experience be willing to work for 50% of the revenue? And the answer is most of the time because he or she wants to keep his or her life simple. And that comes in lots of forms, whether it's setting up your own office, hiring your own staff, creating your own brand, but the most important and prevalent place where it occurs is not wanting to have to do your own research, being able to rely on the firm's research. But unfortunately, most of those advisors never realize how skewed that firm's research is to their own profit motives.
So they just toe the party line, if you will.
That's right, that's right.
Which brings us to the next question. If your advisor doesn't work for a big firm and they work for themselves, how do they go about compiling their research?
Well, this is where you have to be really careful. There's a lot of independent advisors, but they get the research directly or indirectly from a Wall Street firm. So that Wall Street firm might be using their research internally and then selling it externally. Okay. So that's why I call it Wall Street's cancer, because the cancer can spread all the way from captive advisors to independent advisors. And the question that you need to ask is just that, where do you get your research from? And what you're hoping that you hear is that somebody actually does their research, that they get raw data and they do it on their own. If you hear that answer, then that's probably a good sign. If they're going to third-party research companies, then we need to look further and find out which companies.
Right, and they don't necessarily know what they're talking about. Yeah. So I know your personal research is really what led you to change your business model in the 90s. This was very important. It's
actually the thing I'm most proud of in my career is the fact that in the late 1990s, when everyone was suffering from the worst stock market addiction ever, I had the courage to change my business model when I foresaw what I thought was likely to happen, which is a long-term secular bear market, and I had the courage to change my business model from the stock side to the fixed income side because it was in the best interest of my clients.
Okay. Well, let's go to question 3. I've got a hot stock tip somebody told me, and I want you to put me in it right away. What would you tell me?
Well, that's kind of a trick question when you ask that of another advisor, and the reason it's a trick question is because hopefully the advisor will talk about that and say, you expect the advisor to talk us out of hot tips, but hopefully that's not what the advisor is doing. Hopefully the advisor will say, let me go do some research on that and get back to you. Because it might be a stock that he or she doesn't follow, and it might actually be something that's good. So don't just categorically say no, forget about it, because if that's the case, then it's probably an advisor that focuses on things that he or she follows and doesn't think outside the box. So it's important for them to have the research capacities to say, look, I will research this and get back to you and let you know.
So resounding maybe.
That's right.
Okay.
That's right.
Well, the next question kind of lays all the cards out on the table. And you say you should go to your financial advisor and say, tell me about a time in your life or your career when you strayed from the pack and led others down the road less traveled.
Absolutely. That's great, because what I'm hoping to hear there is I'm hoping to hear stories where someone says, you know, I didn't see the drop coming in the late 1990s. But after 2003, I went ahead and I researched market history, and I realized this is likely to be the beginning of a much longer trend. And I'd like to hear, ideally, that the advisor changed their business model at some point down the road. And even if they didn't do it on that first drop, if the financial crisis hit and then they saw it, there's a lot of evidence out there we talk about in the show all the time, where every bear market we've ever had has had 3 or more major drops within it. So even if after the financial crisis, when the market was down 57%, that advisor said, you know what, I altered my business model because I looked at stock market history and determined there's probably going to be another major drop there, then that's still a good sign.
Okay.
What you hope you don't hear is somebody who says, oh no, my business model is the same it was in the 1990s.
Well, I know you've shared a lot of stories with us about when you've taken people down the road less traveled. Do you have a quick Robert Frost moment for us?
Absolutely. You know, one of the most recent ones was when consensus was that interest rates are going to go up soon, and there's a fixed income bubble, all the fearmongers said, and you should never invest in fixed income at a time like this. And I totally disagreed with that. And as a result of that disagreement, you know, I actually publicly predicted at the beginning of 2015 that rates probably wouldn't go up in 15 much at all. And frankly, long-term interest rates ended the year in 2015 lower than they started the year in 2015.
Well, thank you so much. This has been so enlightening. And I know you have some final thoughts to share with us on today's topic. Absolutely,
of course. I always have something else to say, right?
We look forward to that.
I know. Well, thank you. Listen, history's full of great leaders whose names we all recognize. The financial planning business is full of great leaders also, and while their names may not be household names, you can bet their clients know their names and appreciate them, especially in light of what the economy and financial markets have been through in the last 16 years or so. The worst financial crisis since the Great Depression, the collapse of the housing market, and 2 major stock market drops of 50% or more. And now we have the threat of an economic perfect storm ahead that could lead to a 3rd, even greater market drop. If ever there were a crucial time for leadership and retirement planning, now is that time. Hopefully today's show has given you some insights into the kind of innate leadership qualities that are crucial in the financial planning process. If you possess those innate qualities along with the right knowledge and experience, it means you're probably going to do well managing your own money. Or if you have a financial advisor who possesses those qualities along with the right knowledge and experience, it means that he or she may just be the right kind of leader for these uncertain times. A leader who isn't afraid to zig when everyone else is zagging, or to ignore Wall Street hype and supposed textbook rules in favor of a path that he or she feels will serve you better. A path designed to protect your assets and better ensure that you'll be able to weather any economic storm and achieve your retirement goals. But just remember, if the majority of people don't possess the innate leadership qualities necessary for sound strategic investment planning, then chances are the majority of advisors don't either. So take the time to look inward, then look outward, and make sure you have the kind of leadership you need and deserve. The right kind of leadership for the income generation. Thank you for watching.